Cryptocurrencies, NFTs, and other alternative assets are some of the hottest topics in the financial world today. They offer the potential for high returns, but also come with high risks and volatility. In this article, we will explain what these assets are, how they work, and how you can invest in them safely and wisely. What are cryptocurrencies? Cryptocurrencies are digital currencies that use cryptography to secure transactions and control the creation of new units. They operate on decentralized networks, meaning that no central authority or intermediary can control or manipulate them. Some of the most popular cryptocurrencies are Bitcoin, Ethereum, and Litecoin. Cryptocurrencies have several advantages over traditional currencies, such as transparency. All transactions are recorded on a public ledger called a blockchain that anyone can access and verify. Security. Cryptography ensures that transactions are valid and that coins cannot be counterfeited or duplicated. Speed. Transactions can be processed in minutes or seconds compared to days or weeks for some traditional payment methods. Low fees. Transactions can be done with minimal or no fees, especially for cross-border payments. Innovation. Cryptocurrencies enable new applications and use cases such as smart contracts, decentralized applications, and decentralized finance. However, cryptocurrencies also have some drawbacks, such as volatility. Cryptocurrencies are subject to extreme price fluctuations, driven by supply and demand, speculation, and market sentiment. Regulation. Cryptocurrencies are not regulated by any government or institution, which means that they are subject to legal and tax uncertainties and risks. Hacking. Cryptocurrencies are stored in digital wallets, which can be hacked or compromised if not secured properly. Scams. Cryptocurrencies are often associated with fraudulent or illegal activities such as phishing, ransomware, money laundering, and terrorism financing. What are NFTs? NFTs, or non-fungible tokens, are unique digital assets that represent ownership of something, such as art, music, videos, games, collectibles, or even real estate. They are created and traded on blockchain platforms such as Ethereum that support smart contracts, which are self-executing agreements that enforce the rules and terms of a transaction. NFTs have several advantages over traditional assets, such as uniqueness. NFTs are one of a kind and cannot be replicated or replaced by another identical item. Scarcity. NFTs have a limited supply and can increase in value due to their rarity and demand. Authenticity. NFTs have a verifiable history and provenance, which can prevent fraud and plagiarism. Ownership. NFTs give the owner full control and rights over the asset, such as the ability to display, sell, or transfer it. Creativity. NFTs enable new forms of expression and innovation, such as interactive and immersive art, music, and gaming experiences. However, NFTs also have some drawbacks, such as environmental impact. NFTs consume a lot of energy and resources to create and trade, which can contribute to greenhouse gas emissions and climate change. Legal issues. NFTs are not regulated by any authority or standard, which means that they are subject to intellectual property, copyright, and tax disputes and uncertainties. Technical challenges. NFTs depend on the security and functionality of the underlying blockchain platform, which can be vulnerable to hacking, bugs, or network congestion. Market risks. NFTs are subject to high volatility, speculation, and hype, which can affect their price and liquidity. What are other alternative assets? Other alternative assets are any assets that are not considered traditional or mainstream, such as stocks, bonds, cash, or real estate. They include a wide range of categories, such as commodities. These are natural resources or raw materials, such as gold, silver, oil, or agricultural products. Hedge funds. These are private investment funds that use various strategies and techniques such as leverage, short selling, or derivatives to generate returns and hedge against market risks. Private equity. These are investments in private companies that are not listed on public exchanges, such as startups, venture capital, or buyouts. Art and antiques. These are collectible items that have artistic, historical, or cultural value, such as paintings, sculptures, or furniture. Wine and whiskey. These are alcoholic beverages that can appreciate in value over time due to their quality, rarity, or age. Sports memorabilia. These are items that are related to sports, such as jerseys, cards, or autographs. Other alternative assets have several advantages over traditional assets, such as diversification. Other alternative assets can reduce the overall risk and volatility of a portfolio by having low or negative correlation with the market. Returns. Other alternative assets can offer higher returns than traditional assets, especially in times of market stress or uncertainty. Inflation protection. Other alternative assets can preserve or increase their value in times of inflation, as they tend to have a positive relationship with the price level. Passion. Other alternative assets can provide personal satisfaction and enjoyment to the investor as they reflect their interests, hobbies, or preferences. However, other alternative assets also have some drawbacks, such as illiquidity. Other alternative assets can be difficult to buy or sell as they have limited or no market access, transparency, or regulation. Costs. Other alternative assets can incur high costs, such as fees, commissions, taxes, or maintenance, which can reduce their net returns. Risk. Other alternative assets can be subject to high risk, such as fraud, theft, damage, or obsolescence, which can affect their value and quality. Expertise. Other alternative assets can require specialized knowledge, skills, or research, which can be challenging or time-consuming for the average investor. How to invest in cryptocurrencies, NFTs, and other alternative assets. Investing in cryptocurrencies, NFTs, and other alternative assets can be rewarding, but also risky and complex. Therefore, it is important to follow some basic principles and best practices, such as do your homework. Before investing in any asset, you should do your own research and due diligence, such as understanding the fundamentals, risks, and opportunities of the asset, the platform, and the market. You should also consult a professional or an expert if you need guidance or advice. Start small. When investing in any asset, you should start with a small amount that you can afford to lose and gradually increase your exposure as you gain more experience and confidence. You should also diversify your portfolio across different assets, platforms, and sectors to reduce your risk and enhance your returns. Be cautious. When investing in any asset, you should be cautious and realistic and not fall for scams, hype, or FOMO, fear of missing out. You should also have a clear goal and strategy and not let your emotions or impulses influence your decisions. You should also monitor your performance and adjust your portfolio accordingly. Be safe. When investing in any asset, you should be safe and secure and protect your assets and information from hackers, thieves, or fraudsters. You should also use reputable and reliable platforms, services, and tools, and follow their rules and regulations. You should also back up your data and keys and store them in a safe place. Conclusion. Cryptocurrencies, NFTs, and other alternative assets are some of the most exciting and innovative investments in the financial world today. They offer the potential for high returns, but also come with high risks and volatility. Therefore, investors should be well-informed, well-prepared, and well-disciplined, and follow the principles and best practices outlined in this article. By doing so, they can enjoy the benefits and opportunities of these assets while minimizing the drawbacks and challenges.